Estamos con ustedes desde la tribuna de lo que es el Money Show, que es una de las conferencias importantes de finanzas, como ya ustedes lo han visto a lo largo de nuestra programación. Además de que estamos en la ciudad de Miami, desde donde transmitimos el negocio TV América, tengo el gusto de tener a Jim Bianco, que efectivamente lo hemos entrevistado nosotros. La pregunta que le tenemos que hacer a Jim, que conoce de toda esta parte macro, es: Jim, what's happening with the markets? Do we gonna lose steam, or we gonna go higher from this level around 5,800 and change, 5,900 on the S&P? What do you think?
Well, I think what's happened was, if you back up 2 or 3 weeks ago, we were worried that we were going to have tariffs that were going to be punishing, that they were going to be effectively a big tax increase to suck money out of our economy, and those have gotten a reprieve. So the markets have rebounded because we've gotten that reprieve. We're about unchanged on the year, but we still have two things that are happening. One, the tariff level we have now is twice of what it was at the beginning of the year. Mm-hmm. So we still have a lot of tariffs. We just don't have 145% tariffs on Chinese products. We have 30, but we started the year at 10. And two, it's not permanent. So the other fear is what happens, the 90 days will end September 14th. What happens on September 15th? Are we going back to higher tariffs, or are we going to get something a little bit more permanent? So I think the rebound that we've seen in the market is about where we should be right now. I wouldn't expect it to do much other than be very volatile until we get more clarity. Mm-hmm. And that's really what we're waiting for. Now, that clarity could be negative. It could be clarity that it's got worse, more tariffs, or it could be clarity that it's gotten better.
One of the things that captured our attention today, and today for you guys that are seeing this, May 15th is today, Thursday. Question: what's happening? And you and I were talking about fixed income. What's happening with the 10 years? Obviously, we're around 440 something, but we saw the number today telling us that inflation might go down. But the other peers of you that I've been interviewing, they say inflation is going to go higher again in May when we get the read on June, and in July when we get the read of June. So what do you think is going to happen with the fixed income market? I know you're an expert on that. You have your own ETF. So you can tell us a little bit, please.
Yeah, so the bond market, I think what you have to do is you have to think about our economy. April 2nd was Liberation Day when we made the announcements of the tariffs, and then we had the backing off of the tariffs. I'm a sports fan, and I'd like to use, it's like your best footballer just broke his leg. Well, it ain't the same team. So what's happening with our economy after April 2nd is not the same economy as April 1st. So the data that we got today with PPI, the Producer Price Index, CPI, retail sales, is all measuring what it was like before Liberation Day. After Liberation Day, the fear is we're going to see higher inflation because somebody's got to pay all these extra tariffs, and that's going to show up in higher prices. But we're also seeing higher expectation of growth. The economy is going to get better. Interest rates can go up for good reasons or bad reasons, and I think that they've been rising for a little bit of both. They're rising because the fear of recession is going away, the growth is going to stay there. Then natural interest rates should be higher in the U.S. if we're going to have no recession. Also, the fear of that we're going to have a little bit more inflation because of tariffs. That's why interest rates are going up, and that's why it's being met by the stock market as a bit of a mixed bag. The stock market rebounded off its lows, but it's only unchanged on the year, and that's why I think from this point forward, any higher interest rates is going to be a bit problematic for stocks.
And do you think that what Goldman Sachs did a few hours ago, raising the target of the S&P for 2025 is the right course of action if you keep saying that we might keep the level of tariff at this level between China and the U.S.? Do you think the S&P might have growth to over the 6,300 end of the year?
It's possible, but that's a bit of a stretch. If what we see now with 30% tariffs on China and 10% tariffs on everything, that will be a bit of a stretch. Remember, a tariff is a tax, and that there is a big tax that is pulling money out of the economy. That tax will also show up in hurting earnings of companies. And the U.S. stock market, unlike the European markets, has a much higher valuation. All that means is that when you buy U.S. stocks, you need a lot more things to go right than if you buy cheaper markets. And a lot more things to go right means earnings. And if you're going to take some of those earnings away in the form of higher taxes, that makes it a harder hurdle. If the tariffs go down, if the trade impasse relieves itself, sure, the Goldman Sachs target can be very reasonable. But if we stay where we are now or it gets worse, we undo some of this stuff after the 90 days, I don't think it's reasonable.
The other thing that captured the attention of the audience and obviously everybody these days is that three major guys, Jamie Dimon, Paul Tudor Jones, and Stevie Cohen are saying we might revisit the laws. And again, they have all the information, data, and people that are whispering to their ears what might happen. Do you think that we might revisit the law if worse comes to worse? Or what do you think is going to happen in the next, let's say, couple of quarters?
Well, it's a reasonable argument that we can revisit the laws, because what they're arguing is today things are worse in that we pay more tax, a higher tariff than we did January 1st. So that is a problematic. And if the perception is that this level of tariffs is okay, maybe we could go a little bit more, we could see that drag show up, that we're going to revisit the lows. It really comes down to, where are we going next? Are we going to see higher tariffs? Are we going to see lower tariffs? Are we going to see an inversion of these 90-day reprieves that we've had? Are we going to see a change in the behavior of a lot of companies? That is the unknown. So just like the Goldman argument that they're going to up the forecast, there's a set of reasonable circumstances that could cause that to happen. There's another set of reasonable circumstances that the tariffs are going to stay at these levels and go higher, that you could see the retest of the low. I tend to think, I'm kind of more in the middle. I think we're going to stay where we are here with a lot of volatility. We're going to bounce around all over the place. We're going to scare everybody. But like I said, so far for the year, you're zero return on the stock market. I wouldn't be surprised if we go into the fall, we're about the same level. We're about zero, but we've gone higher, we've gone lower, we've gone all, in big days, and we're kind of where we are.
Jim, to finish with the audience, we were talking also about the Bitcoin. And I want your opinion about the Bitcoin, because at the end of the day, some people that I interviewed says we're going to go to 200,000, 250,000. No, we're going to keep it at 120. It's very difficult to forecast the Bitcoin, but what is telling you in your experience when the asset is maturing? Where do you think it might go? And do you feel it's a good place to put money these days?
Well, in the short term, Bitcoin and all cryptos are speculative assets. They will go up with the stock market, another speculative asset, they will go down with it. Bitcoin is about unchanged on the year. The stock market's about unchanged on the year. So in the short term, the end of the year. If you're going to make the case that Bitcoin's going to go up a lot, you're probably also making the case that the NASDAQ and the S&P 500 are going to go up a lot too. In the long term, over many years, it really comes down to development and trying to broaden out the blockchain that they build on. Can they do things like stable coins, and can they do things like trading and money transfers at large transaction speeds? Like, can you trade hundreds of thousands of Bitcoin a second so you can use them as a medium of exchange? If that's where we're going to go, in the long term, we could see much higher prices. But if the answer is where we're going to go in the end of the year, within the next year, it's really just a highly levered version of the stock market. It goes up more than the stock market, it goes down more than the stock market, but it follows the stock market up and down.
I'm going to tell them in español. Lo que nos está diciendo básicamente es que el Bitcoin puede quedarse aquí a menos que hayan cambios importantes en la dinámica de para qué se usa. I'm very happy that we are meeting together in the conference, and we're going to keep inviting you, and probably we're going to interview you from the floor of the New York Stock Exchange in the next few weeks. Thank you.
Thank you.
Thank you very much.
Thank you. Bye-bye.